Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. Certainly equity markets continue their sort of pretty volatile month of November. Big sell-off to start the week here for the Dow, and it's just going to be very interesting to see how this sort of plays through. Certainly some of the selling is probably warranted. Certainly Apple under quite a bit of, intense pressure out there and under the spotlight. Potentially iPhone sales and sort of production is maybe looking at being reduced a little bit. But also as well, obviously, with the sort of a huge increase in passive investing and sort of exchange traded funds, where just you buy the whole index. A lot of sort of shares are getting sort of sold off, and really sort of the baby sort of being thrown out with the bathwater, if you like. Certainly, there are some pretty good shares out there that are being sold off as people exit these sort of exchange traded funds. And so it's just a question of sort of sorting through the sort of wheat and chaff and finding the good shot. There's some interesting points. The Dow is now officially negative for the year, but for the last 12 months, it's still up just over 4%. So even with this sell-off, for the last 12 months, the Dow is still up just over 4%. Interesting as well, the analysis. Now we've got a sort of split in Congress with the Democrats holding the majority in the House. Obviously, the Republicans still holding the Senate. Interesting when you get sort of a gridlock like that. Historically, that has seen quite a major increase in US equity markets, sort of double digit over the next sort of 12 to 24 months. So will that be the case this time? Adding to the woes as well, obviously, you've still got the ongoing spat between the US and China in terms of trade and tariffs. But again, quite interesting as well. You look at the backup in valuations and PE ratios, and certainly the markets now look reasonably attractive. It's just a question of, one, whether you get these sort of deals sorted out between Trump and China. Most people think there will be some sort of deal sorted out. It may sort of drag on for a little bit, but again, longer term, you look at the fundamentals of the market. You've got record low interest rates. You've got record low unemployment. You've got a little bit of inflation starting to come through into the economy. Corporate earnings are still reasonably good. Now, most of those should be supportive for an equity market and looking for slightly higher prices. Obviously, the big issue could be the Federal Reserve. Will we still see a rate increase in December? Interesting, a few comments coming out now. Potentially look for a slightly more cautious Fed. Potentially maybe one in December, but then they might just be on hold a little bit just to see how the market sort of digest the recent rate hikes. And certainly rates in the US have backed up a little bit. Also as well, we've got a pretty aggressive sell-off in the cryptocurrencies. Again, Bitcoin now down below sort of 4,500. Now, given a lot of that trading is on margin, potentially there's sort of margin calls out there. People are long and now they're sort of getting hit up with margin calls. Equities in the easiest place to go to raise funds to cover those margin calls. Oil under severe selling pressure as well. WTI now back below $55. Now again, quite interesting. You look 6 months ago, oil was trading close to $75, as they now are trading around 53 and change. Obviously for the year it's down, and it's just going to be interesting to see how this sort of plays through. Certainly the OPEC meeting in December now, expected to see some further cuts in production. Then hovering over the top of this is obviously the Saudi issue with the journalist that was killed in certainly mysterious circumstances. Brexit, PM May is facing increasing pressure on that. Although she did get a little bit of support this morning from the Bank of England Governor Mark Carney. He came out and supported her Brexit deal, but still, a pretty tough case trying to sell it to the UK Parliament, also trying to get it ratified by the EU Parliament, so we can see Brexit going through in March 2019. And again, just as a sidebar, already some issues there with Spain and Gibraltar and how they're sort of going to approach the Brexit deal. Here in New Zealand, fixed interest bond offering from Christchurch City, 6 years fixed, looking to be around sort of 362. If you're interested in that, call us on 0800 867 323. Now, certainly with a backup in valuations in the New Zealand market, some of these dividend shares now offer some pretty attractive alternatives out there if you're looking for income. And if you wish to discuss what options are available, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz.